Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? The answer is Deals. This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On this show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions, capital raising, joint ventures, strategic alliances, real estate, affiliate and sponsorship deals, franchising, and more. My name is Corey Kupfer, and I've been supporting deal-driven growth for businesses for over 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the DealQuest Podcast. Let's get started. DealQuest community, I'm very excited to kick off the year here on the DealQuest podcast with my partner, Brian Meegan. We figured, hey, listen, what a better way to kick it off than to just he and I have a conversation about, 2025, what the deal market was like, some interesting things that happened, what we see for 2026, with the disclaimer, of course, that, never know what the future could bring. And then also we're going to share a little bit about, what's going on at the firm. We don't talk about that, specifically a lot because we just want to bring you content, but we'll catch you up a little bit there as well. So, partner, Brian Meegan, welcome to the DealQuest Podcast.
Thank you so much. Appreciate it.
All right. So I'm not going to go through bios like I usually do. You can look us, both, you can look Brian up on the Kupfer Law website, and, he's been on before. So Brian, listen, it's 2025 is a pretty busy year for us, huh?
Yeah. It continued. The end of 24 was insane. And then it just moved right through into 25. And, within the year, there obviously were areas where you're kind of waiting a little longer, but it was a consistent amount of activity. Even within that, you push a bunch of documents through and then you wait for a while and then it's crazy again. So we're in one of those right now.
Absolutely. So, listen, we haven't counted out the numbers yet specifically. We'll run reports at the end of the year here. We're recording this, even though this is going to be out early January. We're recording it on December 10th. I always like to say that, especially when we're talking about trends, because if something happened in between when we release it and when we recorded it, may not be covered.
It could make us really smart or not so much.
That's right. But, estimating as of now, we've done a couple of dozen deals this year, it's 20 or 30 or whatever, but somewhere in that range, hundreds and hundreds of millions of dollars in enterprise value, or actually, purchase price and enterprise value. And I guess one of the things I want to, have you talk about a little bit in contrast is, we've spoken to some of our other friends who do M&A in other parts of the country or other parts of, in different industries. And, for a number of them, their years haven't been as robust. So, what does that say, not specifically about any of our friends, but much more so about what we're seeing in the market, sort of, the dichotomy, maybe by sector or, geography and things like that?
Yeah. I was talking to a reporter a week or so ago and asked a similar question. And the answer is, I think that the M&A market's been lumpy this year. You've got some industries, fortunately, the wealth management space is one of those that continues to rage on. But you got a lot of other industries that are a lot slower right now. I think the contributor factors to that relate to earnings, I think, are a little weaker. Prices are up. And that means that the purchase prices don't look quite as attractive. Meanwhile, you've got a period of lowering interest rates, which means the future is brighter, which pushes both parties to, hey, earnings are down a little bit. We don't have to push this deal so hard. That might be the buyer or the seller saying that. And by the way, things are going to get less expensive in the future in terms of borrowing costs. So why not? We'll get it going, we'll move, but we're not going to move at a breakneck pace, and we'll kind of see how it plays out. And so I think we lower, as a consequence, some lower transaction numbers and the numbers of transactions this year.
Yeah, where before there'll be one more Fed meeting and there's mixed views, but most people are thinking they may cut again here in December. Obviously, by the time this is gone out, we'll know whether they
today, I think. Yeah.
Yeah, but the trend seems to be, they think cost of capital will go down. And it's interesting because there's some things that, in the beginning of the year, there was some question, on taxes. That's been obviously cleared up in terms of what's been done on taxes. The big beautiful bill was passed. Whatever you think of that from a political point of view, it's created certainty around what that's done and, certain things it's put in place, whether that's additional R&D credits or increasing the SALT deduction, like so people, and we've talked before that whether you like the result or not, the market likes certainty in one, like the choices are ideally you get certainty in the direction that you want it to be. The second best choice is you actually get certainty in the direction you don't want it to be. And the worst is uncertainty. So we've had some things that have become, less uncertain or more certain. And then, you could argue that whether things have calmed down or gotten worse or somewhere in between on tariffs. And it's hard for people to, look at that objectively because it's become so political, but there's still some uncertainty there. But, it's interesting. I feel like I'm wondering, your thing here. I mean, I think there's also this weird thing where people can get used to the uncertainty such that it doesn't affect, like if the uncertainty is going to go on for a while, then that's become the new normal, right? Mm-hmm. And maybe we still have to make business decisions, right? Because we may have another year or 3 years of uncertainty, depending on how you look at it. So I'm curious as to what you think about that. I mean, I think almost anything, humans can almost normalize anything.
Exactly. No, I think that's a great point. And that particularly with tariffs, I think that's what makes that such a difficult issue, because while we have lived this year with uncertainty around whether it's going to be 16% or 27% or 47, whatever the number is, now we have pending the Supreme Court decision, which
Right.
could wipe it all out. So,
Right.
I mean, talk about uncertainty. It's not just about whether it's going to be rise or fall because the administration decides to ratchet it up or ratchet it down, but whether it was legal in the first place, and we go back to square one on this, is a huge amount of uncertainty to continue to have to deal with when trying to look out forward and say, yes, this is the right time to sell and or buy. That's tough,
Right.
particularly
Or
for
raise
those industries
capital.
that are impacted.
Yeah. Or to raise capital, do any other kind of deal. What's interesting is there are some folks out there, and again, it's so hard. We don't talk politics on this show, but there are real economic impacts of different policy decisions, and it's so hard to divorce them from the politics. But I think if you are a deal maker, you have to do that, right? Whatever your feeling on something is, it can be politically, and you can do whatever you want in that realm. But as a business owner, as a deal maker, you got to deal with what's so and figure out how you be successful in business, from there. The interesting thing about what some people are saying, if the Supreme Court strikes down the tariffs, which is a signature, Trump policy, right, that the people who think the tariffs are hurting the economy, it'll be an interesting thing because if that ends up helping the economy, with the current administration in place, usually current administrations get credit, right? I mean, the one thing that will do if they strike it down is create a high level of certainty. Doesn't mean that there won't be other policies that create uncertainty, but certainly, it'll take away this ability to sort of, up or down tariff threats that the market doesn't know how to analyze.
Well, and to make it concrete, I mean, for those industries that are impacted by this, and for those, they already know this, but like you're refiguring your supply chain. You're trying to move your sources of manufacturing or whatever it is from one country to another, which means lost productivity. And, again, this uncertainty means you got to go refigure it out all over again. So whether it changes, it doesn't change, like that's lost time, lost productivity, which affects profits, everything else. So it does have some very concrete, in addition to the dollars and cents, has some very real impacts on whole industries.
Yeah. So let's talk a little bit, we can come back to some other things in 2025, but sort of following this conversation through to 2026 with obviously the disclaimer, we don't have a crystal ball and, some black swan event.
You don't have one? Right? Mine's over here.
Even if I had one, it hasn't worked.
Yeah.
So, obviously it's tough to predict anyway. And who knows that tomorrow there could be a black swan event, right? That nobody can predict. But just, in terms of what we're hearing from folks, what the feel is, they talk on the consumer side about consumer sentiment, right? It's similar on the deal side, outlook on optimism, or lack thereof around deals. What's your sense about what's going on in terms of how people are looking at 2026?
I think the real positive is that with this downturn in activity, just like you have a certain base level of unemployment because people are always in transition, right? So there's this certain amount that's always going to be there. You have a certain amount of deal activity that always should be there because people are always retiring. They're always trying to turn things over. So to the extent that that gets suppressed because people are holding on and waiting, that means that it's building pressure for the next eventuality, which could be 26, where if we see some clarity, you could have a burst of activity. So there could very definitely be a very positive outlook for 2026 in deal activity as a result of that pent-up demand.
Yeah. And when you combine that with the fact that there's so much dry powder in terms of capital sitting on the side, I mean, PE firms are flush, and they have their own issues with pressures on, as some of them are coming late in their fund life, and they haven't exited even the investments they've made because maybe the economy's been less certain, not a good time to sell. They have to make some decisions about what they're going to do. Are they going to extend the funds? Are they going to because the investors want returns, and they may have end dates that actually require them to do something. Now, a lot of these fund deals have certain ways where they could extend the recap or do something different. But there is, a huge amount of money out there. Like, money's not the issue.
Yeah. And if we do, in fact, have some correction around a tech bubble and people start to say, boy, I don't really love having my money in the market so much, they start to look for other ways to invest it. That certainly could add fuel to this fire.
Yeah. Let's take a break from the show for a minute so I can tell you about an incredible resource my team and I have put together for you. Secrets of Deal-Driven Growth, Creative Ways to Grow Your Business Even in Challenging Times, is a powerful ebook that helps you take DealQuest Podcast episodes and apply them to your own life and business. This is the ideal tool for anyone looking for creative ways to grow as deal makers, and you can get yours now. It's as easy as heading to coreycupfer.com/workbook and downloading your copy. While you're there, you can also consider joining our dynamic deal-driven community of founders, experts, small business owners, and entrepreneurs. Now back for the show. So let's talk a little bit about, because we've been focused most of this conversation, although a lot of things we talked about affect other kinds of deals, but a lot of what we've been talking about is on the M&A side and somewhat on the capital raising side. We probably, do more M&A than anything else in our firm. And that's, but all of these things affect other types of deals. And what's interesting is, the sort of realignment you talked about, folks looking for different supply chain, options, or different countries, or, the intention or one of the hopes of the policies of Trump with tariffs or whatever is that people onshore and do more manufacturing, at home, right? The challenge is that's a long-term investment process. And, people may be hesitant to do that, especially if they're not sure that the policy will continue. But it does create opportunities, right? New joint ventures, strategic alliances, distribution arrangements, licensing arrangements. The one thing about change of any type is that it creates challenges, but it also creates opportunities for deals in other ways, right?
Absolutely. And, I guess the new darlings, of where are those foreign markets? China was so hot for so long. A lot of investment went from this country there and back and forth. And if that becomes, something that's less attractive because of tariffs or otherwise, that's going to go, it's going to continue to move. Is it going to India? Is it going to other countries where suddenly you've got, we don't know what's going to happen with the Russia-Ukraine war. If that comes to a lasting peace, Ukraine is a huge country with a ton of natural resources and, all sorts of industries there that is going to need rebuilding. Like, there's a whole bunch of factors that could create new and very attractive opportunities into the future.
Yeah, no question about it. I'll tell you just personally, I'm excited for 2026. At the firm, we've been very fortunate. Every year has been our new record year, in part. Brian came in a couple of years ago, and obviously it's been a huge addition to the firm, not only bringing in his existing practice, but creating much more capabilities and capacity. We've been fortunate in a way that our biggest issue over the years has not been that there isn't that was struggling to get business. It's to make sure we have the capacity to handle it. And we, keep expanding. We have a new attorney starting from the time of this recording next week. We're going to be looking for a hire. So it's been a good stretch for us. And one of the things I do want to say, I know that we've got a lot of listeners that, a lot of our clients do listen. And because we have so many listeners these days, many of you are not our clients. But, whether you're a client of ours or whether you've even just, liked or appreciated or posted, about an episode that has, helped give us exposure and kept us top of mind with folks. And just, one of the things I want to do is to say how much we appreciate our listeners, how much we appreciate our clients, a lot of our referral sources, centers of influence, partners in the various industries. It's one of the joys that I have is working with so many, we work with great people. We generally work with great clients and we love, we have great partner relationships that we value a lot. So I want to take the opportunity, in this changeover on the year to acknowledge and thank you all. And even if you're a casual listener, we really appreciate it.
Well said. It certainly does take a village, right?
It does. It does. And listen, for me, I've always said this, it's one of my favorite things I do every week is record this podcast because I get to meet and, and talk to, people I wouldn't otherwise necessarily. We get to talk about deals. I mean, deals are definitely just a passion for us, not only me and Brian, but our team, who, do a lot of the heavy lifting. In fact, my joke was always, with the senior corporate counsel, BZ Yap, who's been with us, or me before Brian, actually for, 15 plus years, is that, with clients is that I do the talking and she does the work, so, but in any case, so yeah, we're super, super appreciative. Brian, any other things that were noteworthy for you in 2025 that we haven't covered yet?
Going into a new administration, you don't know what you don't know, and you're not sure how everything is going to play out. And when you look back, like I said, there were a lot of things that continued unabated. There certainly were new and different opportunities and challenges, but I don't think there was anything that was so new, so dramatic. As you said, after the big, beautiful bill passed, we've got a longer term certainty now around the tax structures of things and looking into next year in the midterms. I don't foresee a lot of unity that's going to make dramatic changes to that. So from a perspective of consistency, I think it's good. So I'm optimistic. We're, like you said, we were fortunate to have a good year and looking forward to this next one.
Now, a couple of themes that have come up at the last couple of conferences I've spoken at, and these happen to be in the investment advisor space, but I really do think they apply, especially in any industry where there is significant opportunity for, good exits on M&A, and certainly where there's PE money that, or other funded buyers, whether it's PE, family office, sovereign wealth, whatever. There's this conversation, and this has been a trend that we've seen either affect deals positively or negatively, and also that people are just starting to talk about, which is really this decision on whether you equitize, either, whether it's generation two financial advisors or whether it's key executives in, another kind of business, and the benefits and some detriments to that. And, I've become an advocate at these two, again, this happened to be wealth management, these two conferences, really to have folks think about, equitizing folks. It's different. Years ago when it was smaller and there wasn't professional capital in the place and there weren't the kind of multiples, some of these factors, there were still reasons to bring people in and create some sort of incentive, retention, attraction, incentive vehicle, which we do a lot of, whether that's phantom equity, profits, interest, profit sharing, equity appreciation, SARs, whatever. There was always a reason to say, hey, we want the team, the employees, the executives to be vested in the overall success of the company. But now there's even more in industries like wealth management and other industries where there's a lot of money in the space. It makes your company more valuable. The buyers are looking to have strong executive teams and or next generation folks in key positions. And so it's something that, came up on panel at the DeVoe M&A conference and that I spoke about in my talk or my interview at the Dynasty Financial Partners M&A retreat in Key Island a couple months ago. Last month. I think it's something that is, it's not a new trend, but in any industry where money has come in, it may be a newer conversation in that particular sector because it becomes more important. So you're seeing a lot of that, right, Brian?
Yeah. And I'll say that, when you equitize that second generation or those key employees, when you have the benefit of time, you have a lot more options and you can do it in a lot more tax efficient way. Whereas, obviously thinking about something where you've got a plan in place where you're giving them equity along the way that vests over a period of time versus a phantom equity where, yeah, that keeps them tied into the ultimate transaction. But if that transaction is 10 years, 7 years out, like how much of an incentive is that? That's hard to see, all of that. When it's right upon you, taxes can be tough with that. I mean, it's great. Don't get me wrong. Like it keeps them in there, but it's not as efficient. And so, planning ahead is a key piece to that.
Yeah. Let's talk a little bit about, regional. I mean, this is somewhat of an artificial distinction, but there is this concept of the coastal aggregators or the coastal deals versus, how it looks different. And listen, there's some truth to that, right? I mean, there's not a lot of manufacturing going on in New York City, right? So you're not going to have as many manufacturing deals, although, right? People who understand New York understand New York State is not only New York City. There's plenty of places, upstate and other places where there's, different kind of manufacturing, distribution, that kind of stuff. But, you're in Denver. You've been in Denver for a long time. You do see a different part of the market than, a flyover guy like me, which I'm not really in mentality, but I do, split time between New York and LA. So, what are you seeing in, let's say, less of the service business side, but more of, actually companies that make things or distribute things or, assemble things?
Right. Yeah. Here we've got a very strong tech sector. Colorado and Denver and the Boulder, Colorado Springs area are well known for growing up these tech AI related companies. It's a very entrepreneurial community. We tend to grow companies up and then you New Yorkers kind of sweep them away and we got to start over again somewhere.
Silicon Valley or whatever.
Yeah. And we've, through COVID, we did have a lot of migration as many other states did out of California. And they came here because they could still do their tech related things, but maybe enjoy a little more freedom and a little less tax. And so we have that as a very robust piece of our economy. Natural resources is another piece that's big here, and alternative. We've had a pretty good solar industry that's been here, got a lot of battery technology. We've got a great company that actually one of my college roommates works for that is responsible for the Waymo orientation, all the wayfinding software that they do. But in terms of heavy manufacturing, we're also not so much in that industry. A lot of that's happening in the Southwest, but it's down in Arizona and Las Vegas, the massive chip manufacturing companies that are putting huge development into that.
Data centers.
Yeah, that stuff is big business down there for sure. And I think that we'll see the ripple effect of that, the service industries that will support those. I think we're already seeing that. But I think it's going to be more in the energy, the tech area that we see that.
Yeah. It's very interesting to see, how things develop. We're fortunate. We actually do deals all over the country. We're fortunate to have a nationwide client base. Obviously in situations where we need it, which is not always, the case, we'll get local counsel involved. But, it's fun because obviously, things are done a little differently regionally. There's different emphasis in different industries. And, one of the things that I think some folks, whether it's on the money side, whether it's on the, banking side or whatever, make the mistake of is that, yes, is AI hot now and driving a lot of the market? Absolutely, right? Are there opportunities there? Absolutely. We talk about wealth management being a rocket ship right now, not different scale than AI, but, in terms of a core solid
more
business.
Steady. Yeah.
Yeah, well, exactly. I mean, a phenomenal business. But there is, and listen, this is not new, but, you've seen a lot of consolidation. And when I was talking to some folks at the Entrepreneurs Organization Deal Exchange Conference, which I chaired the last 2 years, and the community, which now Brian has taken over as the community lead and will chair. And, this conversation of sort of more get your hands dirty businesses, right? Whether it's, contracting, whether it's leaders and gutters, roofing, any kind of trades, right? Plumbing, electric. there's been for some years a movement to professionalize and consolidate in those industries, bring tech into it, right? Bring, software for billing, bring marketing programs. And that, I don't think there was any particular jump or anything last year, but I will say that that just continues. There's still opportunities there for older, kind of industries or more fragmented industries with folks that, certainly are less technologically savvy, to continue. And I see, I've seen folks continue to do those kind of, whether you want to call them maybe roll-ups or, consolidations. I think that that's just an ongoing thing that it still will go for a while.
I completely agree with you. And you use the word professionalize. I think, those creating efficiencies through back office kind of, you bring a lot of these small construction related, as you say, plumbing, contractor related services together. That happened. It started in the medical industry where there's huge margins. Law has gone through some of that, other professional services. But to your point, like some of those services are subject to and are at risk for losing some of their margins due to AI. Whereas these other industries aren't yet. Like they are way down the list in terms of when AI is going to hit them. So talk about a stable, part of, revenue source and consistency in profit. And if you can create greater efficiency there, you should have a pretty long runway before AI has any significant impact on the actual doing of that product or service.
Yeah, before AI combined with robotics could actually go and fix a pipe,
Exactly.
or a leak, on plumbing or rewire, electrical or whatever. So, no, totally. Anything else that's interesting to you or exciting looking into 2026 in terms of any kind of deals?
Again, I'm always excited to see that with interest rates falling, it provides that opportunity for people to extend themselves a little bit. The creativity in our marketplace is, the best in the world, I think. And I think when people are provided with an opportunity that they can take a risk that isn't massive, that isn't hugely expensive, and that they can see some way to potentially make it work, we see a sort of a rejuvenation of that formation of new industries and taking risk and putting things together that, are based on people's dreams. And that I think is exciting to think about as it becomes more attainable to try those things again.
Yeah, I mean, it's one of the things that I love about, Brian and my partnership is that we both passionate advocates of entrepreneurship, not only because we work with entrepreneurs, but because we each are one. Brian has other businesses. I've had other businesses. There are only so many attorneys that truly have that entrepreneurial mindset and experience. And what that does is it does bring a passion. I mean, I'm always fascinated by folks who come to me with something new, or even if it's, an industry like wealth management or whatever, where we do a lot. Everybody has their own take on it, right? And their own, most of them are passionate about serving their clients and doing it in a specific way. So yeah, I mean, it's an exciting one. We work with the new and innovative cutting edge tech company that's doing the new things, sure. But even, folks who are like, we do these, hundreds of these breakaways, right? With teams that are at let's say a wirehouse and are becoming entrepreneurs for the first time, and just the excitement for them to build their own business, to create something in their own vision. I mean, it brings me back to when I left Big Law, at age 30 and hung out a shingle with no clients. I did it because I thought there was a better way. I thought, I had a vision of how clients should be treated, how, the attorneys and staff who work with me and for me, should be treated, which I didn't think was, done the best at big and medium-sized law. And, I remember how exciting and scary it was to pursue that vision, and how a lot of what I thought, I could create and do differently, we did. And then, there were a couple of things when you get on the other side where you're like, oh, now I understand why they did that, right? But that might be 10 or, 15% of it. The other 85+% of it is like, no, you can create something different. Where, there's really, honesty and integrity and transparent billing, and, where everybody's treated great, and where, you're truly partner with your clients and things like that. So whenever we work with folks that are looking to start up or grow, businesses, which is, we're fortunate enough to work with a lot of companies through their life cycle. We've had more and more examples, as we've been in business for longer, where, in Brian's career before, where we help businesses start up, grow through maybe, licensing deals or joint ventures or acquisitions or raising capital, whatever, and then, do their monetization deals. And for me, there's almost, nothing more satisfying than having been on the journey with a client from startup through exit.
It's definitely a privilege to kind of walk along a client as they, make their dent on the universe. That's the great part about entrepreneurship and what we get to do.
Well, folks, listen, I'm excited for 2026. Now, I think it's mostly a blessing and occasionally a fault, is that I'm the eternal optimist. I think it's tough to be an entrepreneur without, generally being that. So you can temper it or take it with a grain of salt. And obviously there are all kinds of factors that could come up and, geopolitics and war and, whatever. But I mean, I think we do have some positive trends. I certainly know in some of the niches, certainly wealth management, certainly, I think tech's got a while ago. I mean, there'll be a pullback and a consolidation, on all this. There'll be winners and losers in the AI rush, and that kind of stuff that always happens. But certainly in the places we play, I'm very optimistic. And then, I'm somewhat optimistic for 2026, even outside those sectors. And I think it's because of, the biggest thing that, is one of the things Brian mentioned early, which is sort of this pent-up demand. I mean, the truth is, like, if you study what's happened over the years, there's only so long that pent-up demand is going to stay pent up, no matter what's going on in the world. Like,
yes.
It just gets to a point where people don't want to hold off anymore, whether it's because they wanted to exit and retire, 2 years ago, and they're like, okay, well, or it's because the money has to be deployed, or it's because whatever. So I just do think no matter what's going on in the general economy or the circumstances, it gets to a point where people start acting. And I have a sense that 2026 could be that year. And we're looking forward to continue to grow, with our clients in the industry and to be able to service more folks and to be able to continue to provide content here and great guests on the DealQuest podcast. So Brian, it's just fun.
Thanks for having me.
2026 year, which is our 7th year doing the podcast.
Good for you. Congratulations.
All right, folks. With that, signing off, Corey Kupfer, Brian Meegan, Kupfer Law, PLLC. That's the actual name of the firm. And listen, check us out. If you have any questions, we certainly can help you. And I pretty much never do this. My marketing people want me to do this, but if you haven't done it yet and you've been listening, give the podcast a good rating on whatever play you do. We'd appreciate that. All right, folks. Until next week, Corey Kupfer signing off. Thank you for joining me on this episode of DealQuest, where we help you understand how deal-driven growth can be your ticket to freedom. If you are interested in finding out more about my law firm, the services we provide to entrepreneurial and growing companies across industries all over the country, and my partner Brian Meegan and I, and my amazing team, just head over to kupferlaw.com. That's kupferlaw.com. And if you want to follow more of my content, head over to my LinkedIn page where I post regularly. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your DealQuest will bring.